A Brampton house just sold for a huge loss, 600 plus thousand in 2 years. This is what this article is talking about. I'm going to be breaking down this one, plus another one that actually had an $800,000 loss in Mississauga. Yeah, so I'm going to be breaking all this down for you in this week's reaction video. Now, if you're looking for some help on how to navigate this real estate market, whether you're buying or selling, because again, I keep saying this, but it is a very confusing market right now, depending on the area you're trying to buy, what you're trying to buy, and also like when you're trying to buy. So right now, if you are looking for some help or some guidance and you want to chat about what you're planning to do with your real estate or, buying of a real estate, if you don't own a real estate right now, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying some of the content I'm putting out there, do me a solid and like the video and subscribe to the Prime channel. And the one and only article we'll be talking about today, and I'm going to elaborate on how badly these losses are, is Brampton house sold at huge loss after 2 years it was bought. So the first thing I personally look at after reading this article is, and again, this is because it's the nature of the business I'm in with kind of like what gets clicks, right? Why did they lead with Brampton with huge loss when they go down into the video or into the article, and I read it, there's another property in Mississauga that had $800,000 loss. It tells me that leading with Brampton as a city gets more clicks. Why? I don't know. But everyone can have their own assumptions, right? So this article basically talks about two properties that sold for massive losses. And you have to keep in mind, okay, this is not me pumping the market or whatever reason. There were big losses. And I actually have an article over here. It shows you what the drop from the peak of the market being February 2022 until February 23, what the drops were. So when I actually go into this post, it talks about like, look, every single city, when you measure from the peak to the bottom, has had significant drops. And in this article, it talks about how, Richmond Hill had the least drop. But at the end of the day, when you kind of look at this chart here, Richmond still had a 14% drop. So it's not like it was protected in any way. It's just it wasn't as bad as some of these things. Now, do keep in mind, these are averages. And I would say Brock probably has very little sales. Caledon being the highest, and with Pickering as a percentage, there's significant enough sales there that actually moves the needle a little bit, right? So these properties I'm about to talk to you are not across the board. They are, I would say, more of the one-off. But if you're looking at an average drop of like 30% in the Caledon area, you're looking at essentially like a $500,000-$600,000 loss, because the price point in Caledon's were these like big new subdivision homes, right? If you look at from the Pickering side, you go from like 1.5 to 1, that's about a $400,000 loss. So relative to some of these properties, like being the first one over here, this Mississauga one that had an $825,000 loss, this is definitely significantly bigger than some of the other regions, right? So this person basically took a 45.83% loss. And what I will point out to you that I can show to an extent is that this was being sold as a power of sale, okay? So I did a little bit of digging. I can't disclose whatever the thing is, but there was a second position mortgage on this, and I don't know who executed the power of sale, but I would suspect that the person in second position executed the power of sale. So if you aren't familiar, again, foreclosure is very costly. It takes a lot of time to go through and get it so that the seller can sell it for whatever the price is. But the power of sale, for the person who executed the power of sale, has to agree to what that price is. So I suspect this person in second position, whoever gave the mortgage, is kind of taking a loss, or what some people call a short sale, right? Meaning that they are not recouping all the money they lent out. And whether that assumption is correct or right, it doesn't really matter. So the point I'm trying to illustrate here is that, yes, a lot of people are trying to hold on to their properties, but in most instances, most of these power of sales are actually happening or being executed by the person in second position. Because the person in first position, if the property has enough equity in it and they're making their payments, they're probably not going to go execute the power of sale. But if you're the seller and you're paying the first mortgage so that the big bank doesn't execute on, or maybe there's terms in the second position mortgage on whether they have to pay the first on or whatever, right? If you don't pay the second, then they're in default and you can execute the power of sale. And the second thing is, look, this is a very sad thing for most people. Nobody wants to see people suffer through this financially, despite all the people out there who are called trolls or like lost porn enthusiasts, right? But this is a very unfortunate situation. But what I'm seeing, at least in the power sale, when I do a little bit of digging, is that most people who are in the position to kind of take a loss, they're not going bankrupt because this isn't their only property. So there's probably equity in some other positions. Look, there's gonna be a lot of people like, okay, these bad investors, they deserve to lose money. Yeah, this could be the case. This investor lost some money, but they also probably made some money throughout the big bull run in real estate in the last 10 plus years, right? So it's unfortunate people have to lose money like this, but yeah, this actually happened. Is the person who bought this getting a good deal? Well, on the report I basically read, it said that the appraised value was exactly what it sold for. So I don't know if they're getting a deal per se, but to see that the person who executed the power of sale basically took a 10% haircut from their list price, it tells me that the person who executed the power of sale is fairly motivated to a certain extent and want to recoup some of their money back. Otherwise, they would have taken the price of less than, call it $2 million so quickly, right? So that's one example. So I wouldn't say this is a great deal for the buyer. I would just say this all happened because likely the person in second position wanted some of their money back and didn't want to keep getting a loss because maybe the seller wasn't paying the mortgage on this property, right? So I think that's a take home. Now, the other property this is the actual one that was leading the headline, which is the Brampton one. They took a $640,000 give or take loss, which is about 40%. Now, again, I can't disclose the property. I'm sure if you read the article, you can see the address, and everyone uses House Sigma, so you can actually see the listing history. Yes, it's very sad. A lot of them try to recoup the money, but in the instance over here, this was not a power sale. The sellers decided to sell it themselves. And again, it wasn't their only property from what I can quickly pull on the back end. And keep in mind, both of these properties haven't closed yet. So it's not like it's a done deal where the sellers have gotten their money, but we're in an instance where yes, this has solidified, it's firmed up. This is the price they sold for. And yes, they did lose some money. Again, ironically, I also checked the appraisal on this from the report, and it's exactly what this thing sold for, right? So yes, the prices run up. That some people may have overpaid for some properties. Yeah, it's bound to happen, right? But is this going to be a thing across the board where, you're losing this much money? No, it's not. It also just depends on the ability for someone to hold, right? And the same thing in this one. This one had a second position mortgage, meaning there was another loan in place. And a lot of times, and this is what I'm trying to reiterate with these power of sales, it's not the big banks that are executing the power of sales right now, right? It's the people who have a second mortgage and second position. They're like, oh crap, if I don't sell this thing or force the sale, i.e. power of sale, I'm actually going to potentially lose all my money, especially if the owner of the property hasn't paid my mortgage, right? So it's like, hey, if I lent you, again, this is just an example. If I lent you $100,000, the property has gone underwater, meaning it's worth less than what I lent you on top of the mortgage that's existing on the property right now, because the person in second position would know, right? Unless it's a private and they just didn't care to an extent, right? Depending on what the interest rate is and their interest premium. But what they're basically doing is, hey, I rather, instead of losing my full $100,000, maybe I force a sale and I recoup, call it 50 cents on the dollar, 70 cents on the dollar, 80% of the dollar. Because forcing the power of sale doesn't cost as much as a foreclosure, right? A foreclosure, you have to go into legal proceeding to actually get the right to sell the property, and that takes time and is very expensive. But a power of sale is just built into likely the second position mortgage. It's actually built into the big banks too. As long as you default, they can have the right to sell it, right? So the minute someone sells and then the person in second position is like, there's a very good chance I'm not gonna get all my money back. Let's just, boom, force the sale of this thing, try to recoup some of this money back so I'm not losing it all. And that's the type of power of sales I'm seeing right now. So when a lot of people are saying, hey, distressed sellers or whatever, the deals that are to be had right now are by the sellers who are like, oh crap, I'm going to get screwed. And they're choosing to do this before the power of sale. Once it gets to the power of sale part, right? And again, this one does not go power of sale. The first one did. But once it gets to the power of sale part, the person who lent the second position mortgage very likely has to realize that loss or short sell it before it sells for less than that price. That's what I'm saying. There's less wiggle room on a power of sale than a seller who's very, very desperate. And if you really, really want to do some digging, and we've done some for some clients, a good way to find out is you can basically just search through the sellers if they own another property, right? If they own another property, it means they have equity somewhere else. So they don't want to go bankrupt, right? So more likely to be desperate and realize a little bit of a loss so they don't lose their other primary home. You see what I mean? So when a lot of people say, oh, hey, power of sales are going up, yes, there is definitely some issues happening there, but is it going to be nominal enough, like it affects the entire market? Probably not. Until I start seeing like big banks come out with like big power of sales, which I did like a video I think a few months ago, and there really isn't that many. I'm not overly concerned about the direction of the power of sales. If it does get to a point where the big banks are there and there's a lot more of them, and it does ultimately affect kind of what the neighborhood prices are because there's so many prime sales, yeah, we're gonna have a problem. But at the moment right now, it isn't quite there yet. Now, just a quick update on how many active listings came out in the first active week. We got a 10% increase in listings from roughly like 10,000 to like 11,000. That's kind of normal. It's not a lot. It's not very little. It seems okay. So we're not getting that surge in active listings that we saw at the beginning of fall. Now, are some people anecdotally that I'm talking to waiting till spring because potential rate cuts are coming and see if the sentiment changes for the better? Yeah, definitely, for sure. So I wouldn't say that we're out of the clear in terms of how much listings come back, but at the moment right now, it's still pretty balanced. I don't see prices going up or prices down anytime soon. But again, this all hinges on interest rates, sentiment, and all those shenanigans that are going on geopolitically. Anyways, I hope this gives you an idea of what's happening and using two examples illustrated because it's not as clear and cut as kind of like what it seems like just from the face of it, right? Even when me doing my due diligence and pulling some of this data, it still took some time and a lot more digging than what most normal people can do, right? So if you are looking for some help on how to navigate this real estate market and talk about the risk and kind of aligning it with, you know, what you're trying to do, whether there is risk in that or maybe just wait a little bit, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?